Hello again, everybody. It's Tuesday. Tesla earnings just came out, and they were bad. But as expected, they had Easter eggs on SaaS and energy storage. And it just shows the earnings power of this company. But anyway, we'll get to that later. What I want to talk about today is where the crypto market cap is. Happy Tuesday, 2.5 trillion, 70 billion of volume, not that much. Bitcoin's hovering around 66,600. It's weird. It's like 66.7 is the magnet. And what else? Fear and Greed 71, which is up higher than last week. I will go through this pretty fast because I've got to get to the Tesla earnings call in 20 minutes. And now this is investment advice, and a shout out to the team in Patreon. Devin Zimmer says, new to the Patreon family, IA and Patreon is like discovering the world exists after living in a cave. Well, thank you so much, Devin, for being part of the team. Okay, we're going to start with the ugly news first. Unlocks, as always. Some nasty ones this week. Yield Guild Games, and I've been saying for years. Oh, by the way, thank you, Shake and Steph and the mods in the chat and Adam Q and everybody out here. Yield Guild Games, another 5.37% unlock. Ajax, a big one too, 8.67 million. Optimism, nonstop raining, 2.31. Prime is there too, 4.4% unlock. Never heard of Prime. And then the other one that's worth mentioning is DYDX, which has been leaking coins for a long time. That's why we built the compendium. It identifies these things. And with that type of unlock, the selling pressure is just too much for price appreciation to actually happen. Let's talk about another over in the ugly news. Just a reminder, in case I forgot to say that, the US has surging financing costs. In Feb, the tally on the interest on debt is $1.1 trillion. Bonkers. Can you imagine all the good you could do with that money instead of paying it to yourself? You print money to pay for stupid programs that don't do anything, and then you pay debt on the money that you print. Some things I just don't understand. Now, time for the bad news. Bitcoin is still down 6% for the month of April, but I can't say I promised you guys, but I do believe April will turn positive. But we only have a week left for that to happen. So it may not happen. We'll try. Either way, after 7 straight months up before, which is a record we haven't had since 2012, maybe we'll take a breather for a month. We'll see. Let's look at the money flow. Money flow is also down last week. Digital assets lost about 206 million. And trading volumes fell to about 18 billion. Breaking out the big flows, Ethereum, big bleed, minus 34 million. Bitcoin, minus nearly 200 million. And the only thing that I kind of got some money in was a little bit of Litecoin and Chainlink. They had 3.2 million and 1.7 million respectively. The rest all bled a little bit, including Solana, $300,000, which is nothing. But again, that's it. Polkadot actually had 1.5 million in, as well as Cardano and XRP 1.3. The mind boggles. What are you going to do? Let's look at liquidity. Global liquidity still heading down. Not good. I was hoping for $100 trillion in global liquidity in 2024. It has just been down. A detailed chart below shows you, though, there's a tiny little bit of a bright spark. If you look at the week over week, you will see U.S. net liquidity U.S. net liquidity year over year is up 1.3%, and week over week 2.5%, which is kind of stunning. But again, we will watch this carefully as always. And higher for longer, yes, rates are higher for longer. This is a nice historic graph. Shout out to Sanjay as well for sharing. It shows you how long rates have been kept high in the history of the world. This is the 4th highest long streak on record since 1968. The average is 8 months. We're now at 10 months right now. And again, we'll see what happens. A lot of talk of now the cut being in July. Some talk of some people saying no cuts at all, but they will have to cut because this is simply not sustainable. It's beyond bonkers. Okay, time for the good news, ladies and gentlemen. In terms of the crypto world, since I started measuring this 27 weeks ago, we now have a $2.45 trillion market cap versus 1.3 just over 6 months ago. Users 5.6 million have grown to 10.6 million, and nearly doubling. And transactions 40 million have grown to 65 million, which is wonderful. Fear and greed is at 71, and Bitcoin season is at 39. And by the way, it's kind of crazy. It was at 39 exactly a week ago. Has not changed. Bitcoin price dynamics are super interesting as well. In terms of the Bitcoin update, this is a cool chart from, I forget where I got this. Sorry. I don't remember. Doing 2 videos a day is brutal on the brain. But you can see here the supply dips from 96.11% to 92.44% in 30 days, hinting at maybe a little bit of a consolidation phase. You can see other stuff here over the last couple of days. Focus on the change 30. 50-day moving average is good. 100-day, 200-day, etc. 200-week moving average up 3.71%. RSI down minus 5.77%. Weekly RSI down 16%, which is kind of the red flag here. But the mixed signal is the way you pick this up is neutral daily RSI, cooling weekly RSI, but bullish realized price metrics is kind of the short summary here. In terms of where the top 50 performed over the last 90 days, you can see Bitcoin is there kind of left of center in black, up 70.4% in the last 90 days. And believe it or not, after 70.4% in 90 days, people are still not happy. They want more. They want more cowbell. And then you look to the right, you got all the reds: Optimism, Injective, Monero is always there, Celestia, Arbitrum. And again, those names that are down there because they have terrible compendium scores. It's that simple. There's a direct correlation between the compendium score and how things perform over time. To the left, we still have a lot of the meme coins, as well as Arweave is popping a little bit. Fetch AI, Theta, Near had a good week too, etc. It's good to see Solana did beat Bitcoin over the last 90 days, and other names are there too. Now, some fun news as well. In Finland, we have all this weird divergence of stuff happening in Scandinavia. Some countries there do not like Bitcoin mining, but others are getting creative. So a revolutionary technology is emerging in Finland, and the Finns are now using Bitcoin mining to heat their homes. Interesting. Another byproduct of the energy. And a block. And we know Jack Dorsey has been a big fan of Bitcoin for a long time. And he did promise they'd build their own silicon. And they have developed their own 3-nanometer chip. And it's very noteworthy as well, because if I'm not mistaken, Bitmain is the leader in mining hardware rig creation, and they only use a 5-nanometer chip. But this means potentially that Block's chip is a lot more powerful and a lot more efficient, which could help democratize Bitcoin mining across, the whole network, and enable people to get into the mining process with a wider, broader range of participants. So I'm excited to see exactly what the performance is of this new chip. I remember about 2 years ago, Intel was getting into creating Bitcoin mining chips, and they failed terribly. There's a lot of hope for that, but they weren't any good. We'll see. Now, miners are making bank. This is a cool chart here from Glassnode. Miner revenues are seeing a diminishing growth rate when denominated in US dollars, but a net expansion in absolute size. The cumulative miner revenues topped a staggering $3 billion over the last 4 years, and increased by an order of magnitude over the prior epoch. And we saw at the beginning of this new Epoch 5, the mining fees were out of control. And miners have popped a lot too. In fact, I've got a cool miner chart I'll show you in a minute as well. Let's check out the crypto market over the last 7 days. Interesting. A little dark green for XRP. Near did well. Immutable X, etc. ETH, SOL, Binance all beat Bitcoin. In terms of dollars, Bitcoin up 4.5% for the week. SOL up about 7.6%. ETH 1.1%. XRP 10%. Big gains there. And TON down. Of course, TON was on a rager over the past couple of weeks, but that always happens. Everything mean reverts, everybody. Polkadot, Matic, ICP, Litecoin, Ethereum Classic, all down. Now, first big chart of the day. this is one I like to look at. This is market cap over daily active user. And this comes from kind of traditional metrics I used to look at when evaluating stocks, like, for example, how much is Facebook worth, or Google worth, or Amazon worth for every customer that they have or every user they have. And the same thing can be used in crypto. What I don't like is when this value is very high. So the winner here, which technically is a winner where you don't want to be, the red box, focus your eyes on those. You'll see Polkadot, $2.315 million per user. And I know it's a layer 0, so cool, but still adoption is not quite there. Number 2 on the not naughty list is Stacks, $1.784 million per user. Number 3 is ICP, $1.2 million per user. And ETH has $1 million per user, but ETH also creates a lot of value to all the layer 2s. And Cardano, $803,000 per user. And Say, $784,000 per user. You don't want to be on this list. And when you compare it to some of the other ones, Near, Solana, Optimism have much, much lower market cap allocations per user as well. Let's look at the bleed. This is the movement of funds between chains. And it's interesting to watch now for the last 6 months. The bleed of ETH to SOL was extremely high, but it has slowed down over the last month or so. Here you see the bleed over the last 30 days to SOL is 76 versus 85 million back to SOL. So it's about a minus $9 million out of ETH to the Solana ecosystem, but it's not as bad as it used to be before by no stretch. And now we have an expanded team knocking out the Substacks, and now they come out a lot faster. So you can expect to get these things literally the next day. All the slides, all the content in case you miss something. And if you're like me, you prefer to read than listen. Or some people actually like to listen when I'm running as well. So you get a podcast as well. I think it's about 10 cents a day. Now, another news too, Jupiter acquires the UltimateWallet. Jupiter is one of the Sol alts that I do like. They are doing some very creative things in this space. And what they'll be doing is bringing a lot more mobile capability to crypto. Not only mobile trading, mobile security, mobile wallets, but also very, very low fees to enable this too. And watch this space. This DEX is super interesting, and it has always been one of my favorite Sol alts. Regrettably, however, I tried to buy at 70 cents last week during the big dip, and I couldn't get a fill. Anyway, woulda, shoulda, coulda. Let's look at the stock market over the last 7 days. Really mixed. It was a bad week for AI and chips. Nvidia down 6%, Tesla down 7.8%. In fact, that reminds me. Let's see what Tesla is doing right now live. Tesla is up $8 in aftermarkets, over $152 as we speak. And it did go as high as 156. So it looks like, we'll get to the Tesla earnings in a minute, but it looks like it's not too bad. And it's been a brutal year for Tesla. There's no ifs, ands, or buts about that. Thank you, Mr. Hammer. The only bright spot in the AI world is Google, up 2.4% for the week. Now, let's look at cash. This is interesting because these top 7 companies, the Magnificent 7, are holding $310 billion of melting fiat cash in US dollar denomination. These names are Google, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. $310 billion. Okay? And that is crazy. They are immune towards refinancing at a higher interest rate, considering their huge piles of cash. A lot of these companies have no debt. And they're earning money on this. They're earning 4.5% on this cash bucket. But guess what happens when rates fall? They're going to have to find something else to do with money, just as individual investors that have $6.2 trillion in money market accounts. When the rates come down, they have to deploy that to chase alpha. Maybe they're happy with 5% per year, but when that falls, they won't be at all. Super Soul Man, good to see you again. Now, speaking of Tesla did launch a new Model 3 Performance, and it's quicker than a Porsche 911. And by the way, rumor has it, the Porsche 911 was one of Elon's favorite cars from back in the day, like more than 20 years ago. When he first made money from PayPal, he bought a Porsche, a vintage antique Porsche. If I'm not mistaken, or was it a Jaguar? I don't know. But this puppy can do 0 to 60 in 2.9 seconds. 160-mile-an-hour top speed, and it'll probably cost less than $50,000, which is crazy. So they're making cars that can drive themselves, and they're better than any sports car in the traditional ICE world. And the Roadster's coming next year, which will do 0 to 60 in 0.9 seconds, which is unthinkable. There was not even a Bugatti Veyron can get close to that, and that cost $1.6 million. Anyhow, earnings will be interesting, and I will get to it, and I'll do a full report later as well. But the things to look for on the earnings bingo card, whole bunch of stuff, like what's going to happen with this robotaxi on 8/8? How come they called off India? What will robotaxi look like? What does going balls to the wall mean? What are they going to do with the next gen vehicle? What is their story around AI? Cybertruck numbers, energy numbers, LLM interest, regulatory approval, yada yada. There's a lot of stuff to break down here. Now, what is interesting is the expectations for earnings were kind of mixed and bad. I think consensus was about 51 cents. They missed that. And here I just took this quick scrape from the website, literally a minute before I started going live. So I haven't had time to break it down. But what is interesting, if you look at the top category and you look at the year over year, Q1 2024, you will see, obviously, automotive revenues are down, and it's down because Q1 was a complete disaster. All right, not a disaster because of execution, but Q1 is horrible for selling cars, first of all. Second of all, there was the Red Sea being shut down. Third, there was an arson attack on Berlin. And fourth, it was just very difficult to ship parts, ship cars, supply chain problems. They made them, no problem. They couldn't get them into the hands of the customers. And they said, you know what? We'll sell them in Q2. So it really is a bit of a nothing burger. But what is interesting is the two items here as well. Energy storage. I did believe that would be an Easter egg. Thank you, HS1. And there would be a surprise there to the upside. It looks like they got that. Also, service and other revenues. We know now they're going whole hog into the SaaS business model where they can activate software in a car and generate pure revenue called FSD. People don't understand. That's pure margin. You can sell, you can shift iron or shift metal, as they say, and this car can generate you $100 a month like clockwork. Pure revenue. When most car companies on the planet can't even turn a profit selling a car, they make it up on financing and service. The other bad news at Tesla is you don't need to service them. I have one for over 5 years, zero service, zero. Same tires. It's bonkers. People say, well, you should change your tires in case they blow up. Yes, I will do that. Next time Costco has sale. No, I get my tires done at Tesla if I was going to do that. Bitcoin miner update. We were talking a bit about Bitcoin miners, and I thought this would be a cool thing. And the miners were on fire today. The miners are loving this post-halving Bitcoin season. And there's two ways to read this. First of all, on the very far right, you've got the distance from the 52-week low. And obviously you want to be in the winner, which one in bright green is CleanSpark. It is up now 520% from the 52-week low, which was not even the low. The low was in the depths of the bear market. And number 2 is Mawson, 237%. And number 3 is Wolf. Number 4 is Cypher. Number 5 is Marathon, up 173% off the low. And the other way to read this is your gains to 52-week high. Now, there's two ways of interpreting this. One is if something is beaten down and it's a long way from the all-time high, can it get back? Yes. But with miners, it's different because some of them are not going to make it. Some of them are going to be sold because they don't have modern rigs. They got too much debt. They got no cash in the bank, and they're getting desperate. Every week, I analyze all the reports, and I see how much cash some of these players have, and it is terrifying, to say the least. Anyway, if you look at the gains to 52-week high, you want to look at the miners that are closest to the 52-week high. And number 1 on the list would be, let me pull this up, 19%. Cypher is number 1. Number 2 would be CleanSpark, 20%. Number 3 would be DMGI. And number 4 would be Wolf. Again, you don't want to touch things that are literally 244% from their 52-week high or 203%, because that means there's probably a problem. Could be, potentially. Anyway, I thought that was interesting. Also, regarding energy, And oil, stunning statistic, and I hinted at this last week in OCTA, and oil is very important because 40% of CPI is driven by oil and energy prices, but the US is officially the largest oil producer in the world, and it's not even close. They're now making 12.9 million barrels a day versus Russia 10.1 versus Saudi Arabia 9.7. So it's pretty impressive, and the US now produces 4 times as much oil as Brazil. And Brazil offshore oil drilling was massive for the longest time. People thought they'd be the biggest producer if you go back 20 years. And that's it for today. I got to jump to the Tesla earnings call. Sorry for the quick and dirty one today. Thank you all for coming. Hit the like on the way out. A big thank you to the mods in the chat, and HS and Jeff Hammer and T&D Tesla and everybody coming, and Sean Donnelly. And I'll see you all tomorrow for the Bitcoin Daily early in the morning. Thank you as well, K8, for being there. Good night, everybody. Now I completely lost my piece. There it is. Bye.